Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you from a rainy Westlake Village, California. And today we're going to jump in the charts. We're going to take a look at the bull news, the bear news, and start it off with some of the higher term time frames to give us some context, kind of following up on our, monthly perspective here on why there's potential more downside to come, even though there could be a short-term bounce in play, which we may have just got that bounce. But what did I want to remind myself of here? I guess the first thing is this. The golden pocket is sitting between 71 and 62,000. Usually once you lose that 382 fib, you're going to come at least to the 618 at 72,000. Okay. Also, so you've got the bearish divergence on the monthly time frame, the three drives, which could bring us all the way down to, the green 55 over time. You can see that it is rising. And we definitely don't want to lose 50,000 bucks, but I would not, say it's out of the cards, just taking it level by level. At the very least, I do believe we'll get a nice bounce from this region. If we aren't already about to get it, if we take a look at the 2-week time frame, you can see we are losing the bullish control zone, and that 2-week is going to close on Sunday. Another warning sign there. Weekly time frame volatility is just beginning to lift off. Momentum is to the downside as long as Bitcoin is below 99,788. 5-day time frame. Again, you can see these things kind of all move in conjunction with each other. You can see the first pass on the RSI here after being away from the bearish control zone for some time is usually a bounce, right? Now we are in the bearish control zone. We're going to get that 5-day closure in about 2 hours. Oh, so 2 days and 6 hours. However, the CMEs, a little bit different of a picture. It is going to close here shortly. And to be fair, if the 5-day time frame closes like this, I'd say that would be your more, that's a hammer candle. Worst case, we come back, fill this wick back at 79,995 or the middle of the wick, or maybe even tap the bottom side of this massive girthy green candle and hit the green 55 at 75,000. But I do believe, if we are going to take out this wick, probably going to at least come down to that 618 fib. And again, momentum is to the downside as long as we're below 102,000 on the 4-day. 4-day volatility increasing. And again, these higher term time frame moves can, catch a 40% move, somewhere between 30 and 50%. So where did the expansion take place? From this candle, we'll call it. 30% takes us down to that 786 fib at 62,000. And the boring thing about the higher term time frames is it can take a long time to play out. A very, very long time to play out. And that's just something to be aware of there. Something to keep your eyeballs on. So, to me, that almost looks like, that's a 4-day reversal. Lower. That's a very, very odd shape there. Same thing. So CME's, not giving us as clear of a picture, but we will close that 5-day time frame here today. The 4-day already closed. 3-day is just dipping his toes into the bearish control zone for the second time here. And, will we have bullish divergence? Yes, we will. So if we can, essentially confirm this as a higher low, the problem is you need to get back above. Today's an important closure. I would say this on the daily time frame, at least for today, we have graced ourselves back into or above the Y200 simple. If we can close above there today, I would say that's a good point for the bulls. And maybe we get a little more price action bounce. Again, I'm not ready to get bullish until we take out this high at, call it 95,280. Back above there and back above 100,000, right? It's kind of one level at a time. So bouncing off the 0.5, the 50% retracement. Let's just see what happened in the last bear market or bull market, which eventually flipped into a bear market. And, you know, how do I classify really, you know, entering that bear market? It would be, you know, a weekly trend reversal. So again, you know, this is looking bullish from, you know, from this standpoint here. And we could even close this and not use the wicks and see if that adds. So it's still a bounce off the 0.5. Why am I bringing this up? Well, what happened on the last major retracement there? Would this be a 0.5 retracement? No, it was a retracement down into the 618, even if you take it from the breakout level. But I just want to confirm that with the the higher term time frame index. Or can we use something else here? Nope, I got to add BLX, the index here. So, you know, and again, marking off that, we also have this long-term trend line kind of holding up, unless you draw it like this, right? Which means the trend line does leave us a little more downside room down to about 66,000 here. So just giving us some context and you know, I'll get into some more bullish stuff here in just a second. And you know, do I think the bull market is over? None of the bear market, you know, sell everything, pack your bags and go home. Things have fired off yet. So the answer is no there. But short-term downside, you know, what happened this past week? The U.S. stock market lost $5 trillion in value in 3 weeks. I think the NASDAQ was down 17% from the high. Inflation came in today. It says consumers' 12-month inflation expectations jumped to 4.9%, the highest level since November 2022 from 4.3. In February, over the next 5 years, consumers saw inflation running at 3.9%. Now, what I would say to that is, how do consumers see or know any of this? I mean, anybody at the grocery store, we know the prices are higher, but you know, oh, how are they going to give a number at 3.9%? How are they going to measure that? I would say that's, you know, give or take a few things. Trump can pull some wild cards here still. Yeah, there is, you know, hope for a short-term bounce as the NASDAQ is pulling in a little bit. And you can see it again here. Michigan 5-year inflation expectations jumped to 3.9%. However, the consumer sentiment survey says we're at 57.9. I guess that is bearish for the dollar. Why not take a look at some of those things really quick as well? So why did I bring up the BLX? Yeah, because I wanted to see, okay, from the breakout low to high, where did the retracement come? Into the 618, into the golden pocket right there. Then, and to me, this is more, I think, best case scenario at the moment for Bitcoin is we get some more downside continuations in the stock market. And what do we have to contend with over the weekend? You know, Trump is signing some new executive orders. You know, he's throwing tariff one day, tariff not the next day. And, you know, so what does that mean over the weekend? You know, any kind of a tariff rumor typically does set things off, you know, relatively to the downside. So just, you know, keep your eyes peeled for that. And then, yeah, last point before actually, I'll leave the bull news for the end here. The bull news for the end. We are coming along our fourth straight week of downside for the stock market. We're going to be closing the market in 2 hours and 58 minutes. So where's the daily? To me, I mean, the daily looks like it wants to bounce, but it's still got to get above this high, close above this high, really to confirm this as a low. And just, we could be retesting the bottom side of this channel. Let's see what the S&P looks like. From high to low, 10% drop there. The Dow giving back a little bit more, right? Oops. The Dow Jones from the high to the low, down 9%. And let's see, was it the NASDAQ that gave up the most? From the high to the low, 14.65%. So, a few more percentage points and battery at critical level. Oh, okay. Thanks for warning me. You hate to have your mouse run out right in the middle of a trade. So what are we contending with? Massive fear in the stock market, still inflation fears, even though the GDP numbers came out a little bit better and inflation came out a little bit better over the past couple of days. The market really didn't, receive the news with a massive bounce. Also pointing out here on CMEs that we did fill the gap here. Gap filled and rejecting at that Y200 simple. And I think it was a bit of a front run again. So very similarly to this gap, which I think is more easily present here. Boom. Okay, I'm going to take that off as well. You can see on the CMEs, let's see, put it on a daily time frame, a little bit easier. Gaps either, provide support, right? Look at this gap right here. Came back, filled it, bounced by how much? 30%, and then continued down. Then we had this gap here only to, not get filled for how many months? So gaps do get filled, but, that took, 193 days. 193 days. That's, almost a half a year, or more than a half a year. So if this gap is a rejection, so on the first pass, we bounced, right? Pretty significantly. Didn't fill it all the way. And on the daily, it does look like it was filled. If you look on the 4 hour, we came pretty darn close, but did not quite fill it. And this does look like a bit of a W formation, which, to be fair, looks confirmed in my book. And that would give you a target all the way back to $90,000, with some stops along the way, of course. And however, if we do get a rejection here, like I said, on the daily time frame, and we cannot close. Oh, look at that. Y200 simple got picked up perfectly on the CMEs on the first pass, but vice versa on the hourly time frame. You can see we are rejecting that Y200 simple on the first pass after being away from it for some time. And after grabbing all of that liquidity there, to me, it looks very similar to kind of this looking above the range and then popping back down. Very similarly here, we're looking above and, downside target 79, 750. Want to see that area begin to hold if it does reject here. Okay, what else did the last thing, the bull, perhaps bull news, perhaps bear news, would be this here on the daily time frame. We are printing what's known as a bull moon, but as Mr. Eric Crown, shout out to Eric Crown on this one. Generally speaking, these moons do print and we get some upside. These are the bull moons, right? Bull moon, bull moon, bull moon. But this is a special kind of moon. I've heard it called a blood moon or a worm moon. And if basically these worm moons have failed pretty miserably in the past. So that's just something I wanted to bring up. And, still slightly looking for more downside, somewhere between the, 72 to 60, call it 70 to 60,000. We want to get in that golden pocket for a real, grab enough liquidity so we can bang it back up and hit our, longer term higher targets. Additionally, right now what's happened in the stock market has not produced any rate change for the CME's, Fed rate hike tool. Just has not produced anything saying the Fed is going to lower rates, right? That's what we need. The other thing today, I believe, is the debt ceiling debate. Right now, Democrats and Republicans are fighting over the debt ceiling. If the debt ceiling does not get solved, I think it's kind of, something that will get solved. It's just a matter of time. But it could be, one more point in the bear's court and one more point to kind of drive us back down to the lows here on, what was it? The low that got put in here. After getting a bounce back up to the 382, you can often see that move, back to the 618. So again, just want to be more than present with all the different options on the board here. We are not out of the woods yet. And checking in also on the fear and greed index. This is probably a point for the bulls. When there's massive fear in the market, that's when it's time to be greedy. The fear now is at a 27. And I believe we're coming off a 10 read, which if you bought that day on, I believe it was, March. It's not letting me zoom in very nicely, but somewhere around let's see. Was it the 5th? I believe it was the 5th. The March 5th lows. Call it March 5th, March 10th. Close enough is close enough. So there are some bullish things, and any kind of rallies I am expected to still get faded and playing with the downtrend at the moment. And then, hopefully we can pick it up. We got 2 weeks left in the month of March. Perhaps April can be more of a green month. But we will be keeping our eyes on everything. I hope you enjoyed the video. If you did, make sure you smash that like button, and I will see you in the next one. Take care.